Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, April the 6th, the year's 2020. Let's talk trading. Keeping it simple again. I know I've done videos about keeping it simple and trading is simple, but we've got to go back to it. But first, remember, fellow traders, boys and girls and non-binary people, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. Okay, and one of the things, because trading's risky, I say this just about every video, we have to have our money and risk management in place. We cannot afford to lose more than we are willing to lose per trade. That's what risk is. And I have Walmall on the line today.
Hello, guys. I hope you're doing well. It's been a fun morning trading so far.
Yeah.
And, hopefully you're all profitable.
It's been real fun trading. We'll tell you why we're laughing in just a second, but here we go. Most of the weekly gaps have filled. We've got 1, 2, 3 that haven't. So weekly gap traders, it's paid off for you. We're down for the day, week, month, and year on the euro. We're still putting in that range here, the opening range for the week here on the euro. Inside bar, there's a lot of inside bar trades here. And you can see we're in the weekly inside bar area for the euro. It actually touched today and touched Friday and then bounced off of that. That low is at 107.72. For the range right now, the euro's only at 67, and you can see we've got plenty over 100, some over 200, and we've got the euro New Zealand and the euro Australian over 300. Something's going on. Those two pairs, the AUD and NZD, have been really strong today. Look at the euro bouncing almost 108, Walter.
Yeah, I actually got in it, believe it or not. So.
Yeah, I believe it. This guy, I tell you, he's a machine. He's been trading like crazy. Okay, so we already taken out the pivot point here on the buy zone, crisscrossing across that weekly open here. You can see how many times. So once again, we've only got 67 pips range, just a low day. Out of the old-fashioned rat zone here, rocketed out. Green rats are feasting. On the pivot, we've already shown we hit it, and we're still looking to hit the weekly pivot maybe sometime later this week at 109.05. And you can see here, once again, the weekly pivot and the daily pivot. Right now we're in that lower wick zone on there. And here we go. We're looking at the Walmall freebie chart right now. So, Walter, tell the traders out there why we're laughing.
I started my day off. They were just bad trades I took. I just didn't do it right. And so it's like, I've got myself out of it. So now I'm up 11 and a half, a little bit more than that. But it took a while to go and just pip it to death. The trade I just got into, just so you all know, I did get out of it with 1 pip. So, but it's just been a day like that, which is knocking off a little bit, chipping away. And that's what you got to do sometimes, is just chip away.
Yeah, but once again here, if you look here, you can see we had a long trigger at 107.90. It paid off there. Then there was a short trigger, which paid off. And then there was another long trigger that paid off. So if you keep it simple and not try and get fancy, you can see there's pips to be made, and you don't really have to struggle. It's just you follow the rules. You don't break the rules. So, for example, when the euro came down to 107.80, I think if I remember correctly, wasn't the range like 15 or 16, Walter?
Yeah, that's exactly right. It was about 15.
And what did you tell me about the range this hour?
I said this is the hour that the range is usually the biggest for the entire day, and you're going against the range. And so you got back, but it was hard. It was rough.
Yeah. What had happened was, what I did was I took a trade about it over in the previous hour where I had gone long and it went against me. And then I averaged in, because that's, that's the way I trade, because I was only in half a position and I had an opportunity to get out with an overall win, but I only got out of the trade that was winning and I kept that other trade. Then it gave me another opportunity right here to get out. I didn't take it, so I wound up riding it all the way down here, and then I put on a couple more positions, and then I got out somewhere right around here, and then of course the candle rocketed up, came back down, and then continued. That's why we were laughing when we started the video, because I think I got out somewhere a little bit above, what was it, 90 or something, and that's it, or 93, and wound up leaving somewhere between 5 and 10 pips on the table. But we're not really too concerned about that. But just the whole idea, keeping it simple. Now you guys have some of you have actually been using this method, but if you look here, this is my old TROPA simple. There's nothing really different here. Now we do have the colored lines, but it's the same thing. Yeah, we've got the 3-level ZZ indicator on here that I modified extensively, but there's really nothing too different, because when Walter and I, when we're not making the videos and we're trading, we just have to laugh, because it's like, hey, you get in the trade and then you just manage the money, and that's what we do every time.
Yep, and that's the thing. I want to point out that trade I took earlier, right at the beginning of the call. I got out with 1 pip, and some people will say, why would you get out with just 1 pip? Well, the reality is I just didn't like what I saw, and I wanted to keep it simple. If I hadn't done that, this would have run down, 10 pips against me at this point in time. And so you got to keep it simple. You got to just, when you see, you're trading what you see, and when you see that it's turning on you, you know what? Protect the money, man. You got to protect the money, and you can protect the money in a whole bunch of ways. I know that TRO he likes to protect the money by either hedging or averaging in, which I've done from time to time. It's not my favorite way of doing things. My favorite way of going and protecting the money is, hey, get out while you can get out. It's much easier to make up a pip, 2 pip, 3 pip, or just take a pip than it is to go and try to make up 10 or 15 or 20 pips. Earlier in the call, I said I was down 16 at one point today, almost 17. Well, the reason why is because I didn't get out based on my rules, and that got me into trouble. And then I had to go, figuring that out, I had to go and win almost 30 pips in order to get back positive. Well, not get back positive, but to be at my goal for the day. And that's a whole lot harder to do.
Yeah, so, the thing is, it's like, you can do it, but it's like, make it easy on yourself by following your own rules. I mean, we tease each other because, in fact, you even said, I'm breaking my rule. I go, why are you breaking your rule?
Exactly, and sometimes you see something, I said this earlier, sometimes you see something that looks like eye candy, and unfortunately, we're human, and what we do is we grab onto things and we latch onto things, and because we do that, it gets us into trouble. The biggest way to keep things simple is set your rules out, know your rules, know thyself, and then follow the rules. And if you're setting rules that are similar to your personality, it's a whole lot easier to follow them. So that's part of keeping it simple.
Yeah, look at this range here on this bar. I mean, we've got these simple indicators here that show it, and we have, I've got other indicators that maybe are a little more, not that they're complex. For example, here we're looking at the 18. It's like the rather not 18, but the 108 right here, the 00. How many times does it cross below it? How many times does it cross above it? Knowing this can definitely right here, can help us in our trades. Definitely can help us.
Yeah. Exactly right.
And then there's something else though on the Smart Rat. I know there's a lot of you traders are interested in this, but I did something that I was telling Walter earlier. I said this might be one of the best things I've done. These percentages, high minus close and close minus low. So this is saying 60 for the close minus low figure. Like right here's 28. This is the current close minus low. 64% of those bars were below it. And then here, the high minus close at 39, 68% was above it, meaning not that the bars were above it, but they closed in that rat range, okay? Or they closed outside of the rat range. So, for example, here I've got my rat at the 10% level here. So 10% of these close minus lows would fit into this area, which here is between 67 and 72. And I think I mentioned yesterday that I did a few things to show how that works. So if you turn on the show gauge, it'll dump the array, and you can see how small the high minus close numbers were here, and how these numbers, they weren't that big. And then you can, of course, if you want to have more percentages, so I'm saying I want it only to be in that rat zone 10% at a time. Well, I can change it. Actually, today I was using the 25%. So you can see here, these are the numbers. It's about 4.3. And so there's really not much. There's not much room, but when it gets in there, you know it's going to exit based on statistics. Now, of course, it might not, but I was telling Walter, I said, you got to trust the stats, and he did one time today.
Yeah. Sometimes if you don't trust the stats, you know, or I should say, if you trust the stats, they'll get you into trades that can be very, very profitable for you. And when you don't trust it, sometimes it causes you to pull out of things that you probably shouldn't pull out of.
Did you just go short at the 00?
I did not. No.
Oh. Okay, because I just noticed that we came across the top of the hour.
Yeah. The reason why is because I was sitting here and playing with the rat zone, so I missed the trade.
But then again, you've already hit your daily goal, so you don't have to worry about it too much.
Exactly right.
Yeah.
So in fact, for the rest of the day, I'm just going to be learning this new method with the rat zone because it's not something I normally trade. So I'm playing with pennies right now, just learning how to do it.
Right. And then let's see, if I turn the gauge off, and then, like, see, we were doing green rat trade, so if we turn the green rat array on, all these numbers here, so here's the first group of 10, here's the next 10. So I've got 250. So if I go 10, 20, 30, 40, 50, you can see here, it's right at 7.3 is that rat zone that I want to say if it gets in there, chances are it's going to get out, because here's all the times it got out of that area. And this is just looking at the raw data. Of course, you can use the other frequency distribution indicator if you like, but I just thought it would be nice to have this, what I call the smart rat, so it knows where those percentages are based on what you tell it, so it'll just plot it. So you can, if you want to have your odds increased or decreased, like you might want 4 out of 5 wins, or you might say, no, I'll take 3 out of 5 because I might get, I can get in more trades that way. Once again, it's up to the individual trader. But go ahead. We've got about 10 seconds or so left.
Okay, we'll talk about it tomorrow then.
Okay. Yeah, so just remember, fellow traders, you got to keep it simple. Horizontal lines. In fact, there was somebody put out there that he's a reformed squiggly line trader and he just got out of rehab. He posted that on one of the videos. He cracked me up. So that just goes to show, traders, it's not what you trade, it's how you trade it. So get out there and drain the banks. and subscribe to the video if you haven't already.